Imagine running a small business, making sales every day, but at the end of the month, you have no idea if you are making profits or loss. That is exactly what happens when a business does not keep proper books. But don't worry, in this video, I'm going to explain bookkeeping for small business beginners in the simplest way possible. By the end of this video, you understand how to track your money, record your transactions, and stay in control of your business finances. Let's get started. What is bookkeeping? Let me tell you a quick story. Imagine Amma owns a small shop. Every day, she buys products, she sells products, and pays for electricity and transport. She also buys new stock. Money is coming in and going out. But Amma never writes anything down. At the end of the month, she asks herself, where did my money go? Did I make profits or did I lose money? She has no idea. This is where bookkeeping comes in. Bookkeeping is simply recording all the financial transactions of a business. It helps you track money coming into your business and money going out of your business, what your business owns and what your business owes. It also helps you understand your business financial position. In simple terms, bookkeeping tells the financial story of your business. Let's look at why bookkeeping is important for small businesses. Many small businesses owners ignore bookkeeping, but here is the truth. Without bookkeeping, a small business is like driving a car without a dashboard. You can't see your speed. You can't see your fuel level, and you might crash financially. So, good bookkeeping helps you know if your business is making profits or loss. It helps you control your spending. It prepares financial reports and prepares for taxes. It helps you make smarter business decisions. That is why every successful business keeps proper records. Let's look at the 5 basic things every business should record. For beginners, bookkeeping is actually simple. There are 5 main things you need to record. The sales. This is the money your business receives from customer. Example, a customer buys goods worth $200. That is recorded as sales revenue. Number two is expenses. These are the cost of running your business. Examples are like rent, you pay for electricity, you pay for transport, you buy office supplies, you pay for internet. All these are expenses. Expenses reduce your profits. Number three is assets. Assets are things your business owns. Examples are like the cash, the equipment, furniture, inventory. Assets helps your business operate. Number four is liabilities. Liabilities are money your business owes. Examples include business loan, unpaid supplier bills, taxes payable. Let's look at number five, which is the owner's equity. This represents the owner's investment in the business. So in simple terms, it shows how much of the business belongs to the owner. Now, let's look at simple example of bookkeeping. Amma starts her shop with $1,000 cash. She buys goods worth $300. Then she sells some of those goods for $500. So she needs to record the transaction to keep track of her profits. So our bookkeeping records will show investments as $1,000, inventory purchase as $300, sales as $500. Now she can clearly see how much she invested, how much she sold, how much profit she is making. So in this case, we can see that sales of 500 less purchases of 300. She has made a profit of $200. So that is the power of bookkeeping. Now let's look at the simple tools you can use for bookkeeping. You don't need expensive software to start bookkeeping. You can use a notebook or a ledger book or a Microsoft Excel, a Google Sheets, or even simple accounting software. The most important thing is consistency. So record every transaction daily. So when you record every transaction daily, it helps you to keep track of all transactions. If that is not done, you might end up omitting some of the transactions or even forgetting some of the transactions that occurred previous days or previous month. With that, you can't say your bookkeeping is complete. So now let's look at the beginner tips for small business bookkeeping. If you are just starting, follow these simple tips. Always keep receipts. Separate business money from personal money. When you do that, you will be able to tell if the business is actually making profit or loss. But when you add your personal money to your business money, you will not be able to detect or be able to disclose if you are actually making profit or loss. You also review your records weekly or monthly. So these small habits can save your business from big financial problem. So review your records weekly or monthly to save yourself from big financial problems. So final thoughts. Bookkeeping helps you understand your business finances. So when you keep simple records, it leads to better financial decisions. So start recording your transactions today. Start recording your transactions daily today. So if you find this video helpful, make sure you subscribe to this channel, Accounting Made Simple by Ethelish. On this channel, I break down accounting and bookkeeping concepts in the simplest way possible for student beginners and business owners. And if you want more free accounting guides, visit my website where I share practical resources to help you understand accounting faster. The link is in the description. When you understand numbers, remember this, when you understand your numbers, you understand your business. Thank you very much for watching from the beginning to the end of the video. See you in the next video. Bye for now.